seeing Ptrans plus GEX mentioned. Yes, we mentioned that a lot. Is there an Ntrans2NGEX also a good strategy?
Yeah, I just wondered if that. I know it's never mentioned. I know you wrote a note.
I mean, that's a
maybe
completely fair question, right? I will let Paul speak a little bit. I believe he's looked at kind of back testing things like that too. However, I think kind of at a high level of what I said of it can be short trades are just harder because the market, stair steps up, elevator down. So those moves down can be a lot faster. And really, if you want to be short, your butt kind of has to be in the steep as opposed to when you're long, kind of a nice gradual grind up. So Ntrans2NGEX is a valid trade. I've seen this kind of as a day trading setup, but in terms of like the edge rater strategy.
Yeah, that makes sense.
Yeah, I think Taylor's 100% correct on this. It's a button seat type thing. Let's kind of just step up just a little bit and then just think of what's happening in the Ptrans2PGEX move or 0 to PGEX move. And then let's try to think about what's going on the other side there. In the 0 to PGEX or the Ptrans2PGEX type move, you're coming out of a condition where people have been bearish and they start voting with out of the money calls. And so that increases of, many things, but increases the GEX ratio and it starts putting pressure on the positive side of the price, what we call the right-hand plane. And, sometimes it can take several days to get up there. On Sunday, we presented some data that shows on average the winners, they still take, 17, 19 days, whatever it is, to get across from Ptrans up to PGEX. And the losers, they take longer. The reason I bring this up is that it's not a straight line. Never is. There are a few that, are one-day trades and they go away on Ptrans to PGEX. But in general, it does take time for a stock to start, building in the call pressure, which we feel is that rubber band. So what are the mechanics that we see? We see a crossing of the 0 or the transition zone. We see a crossing of Ptrans. We get into the trade and then the trade starts taking off. And as it takes off, sometimes PGEX moves up as people continue to speculate out and up. So out in time, up in price. And we end up chasing PGEX, which is often fine. The opposite is really it's not. I don't want to say it's not planned or it's not controlled, but typically it's not. We don't see the same downside speculation. The market actually goes up more than it goes down, and so when we see all of a sudden puts go in on the left-hand plane, it's usually a much more abrupt thing that happens. And sure enough, we'll be in a call-dominated environment like we're right now. We're going to cross that 0 from above. And the 0 to Ntrans, which is a great trade if you can catch it, is generally a day trade. And it may be a couple days. And we've seen it numerous times. We've taken it numerous times. So that's exemplified by, you fall into transition between the plus minus trans levels. And then you decide, or it decides, okay, I'm going to start heading out. And we break minus trans. When people speculate to the downside, they tend to just pound the puts on the downside for the liquid stocks and indices. And that pulls price down a lot. And that's why we see volatility expansion. And what happens is the price moves a lot more when we're heading down. And it becomes, people are opening puts because of the greed component. When you open a put, we're adding negative deltas. It makes the dealer longer. So us, adding negative deltas to our book makes our book shorter. The dealers get longer, the dealers sell, and then, it just becomes this runaway train to the downside. That is incredibly fast. So the takeaway for all of this is if you can catch an Ntrans to NGEX move, there's probably a good rationale or opportunity to do it. You want market volatility. You want the CT just hammering down when that happens. And then I think you're right. Now, we don't have a scan for that. I mean, we could create a scan for it, but it's a dangerous scan, which is why we've held off. And this is really the point I wanted to make. There's not a scan for it because if you don't couple it with the CT and you take those trades, you're going to lose your tail. The edge rater tests show that without the CT short, helping you. And this is literally the short, the fast CT, the instantaneous CT. Without that thing in a new trigger down, which is what we call a TC8, you're probably not going to be able to take the trade. So I would it's a much easier, more methodical trade on the Ptrans2PGEX. And then, for the downside, we're working on a couple different strategies, testing them right now with real money, actually, the SSO and the SDS trade. SSO being the 2x plus 2x contra or 2x ETF on the SPX, on the S&P 500, and then the SDS, which is the minus 2x leveraged ETF to the downside. Those are day trades, and they seem appropriate for something like this, but jury's still out on that. Far more repeatable, flat at the end of the day, not subject to all the noise, not subject to the volatility expansion. And I just want to echo what Taylor said again. If you're going to try to do a 0 to Ntrans or Ntrans2NGEX move, plan to be button seat that day.